What's going on, Bag Brigade? How we doing? It's your boy, once again, back at you, live and direct. That boy Chuck Tiz, Chuck Taylor, Chuck Boomberg is in the house. We're doing a sort of a market recap kind of thing, and kind of going over some stuff from last week, especially some of the trades that we made today. As you can see here, though, this is our Discord community. I don't really need to go through it all that much. There is something I do want to point out in it when it comes to that time. There will be a link in not only the description of this video, but there is a link on our Twitter page, as well as just on the YouTube channel itself. There's a link. Now, I will say this. When you click the link, I mean, you have to go through an application process. It's a private community. We don't just let anybody in. It's free for now, but that might not last much longer. So just keep that in mind. Anybody who's obviously already in here is not going to be paying when we make the switch over. The community will still be private, but we're working on something. I'm not going to get into the details right now, but as of this moment, it is currently free. Click the link, put in your application, and somebody will review it and either interview you or just let you in, whatever. But yeah, crazy stuff this week, huh? I mean, it's so funny to me, like just what's going on, this whole back and forth with Trump, and the tariffs and the Moody's downgrade, and the EU tariff 50%, then just to give them an extension, and then the judge the court said that it was he couldn't do these tariffs, and then of course the markets ripped off that news just to come right back down again. But we'll get into all that. I do want to start off by going over something a little different than normal. So what I've come to notice is there's a lot of cash hoarding going on right now, and this chart should kind of show you basically these are money market funds, and you can see like the rise into the money market funds before they kind of level off, and they usually lead up when money market funds rise like this, where they're highlighted in green. The gray areas, those are what we call recessions. You had your dot-com recession, dot-com bubble recession. You had your 2008. You had the very, very brief COVID one. And it looks like we're doing it again. So what I'm trying to say is today we're talking about a mind-blowing $7.2 trillion just chilling in money market funds. That's right. I said trillions with a T, like Chuck Taylor. It's just sitting on the sidelines like that one friend who never wants to join the party. I don't know. So what's going on? Should you be worried? Well, let's kind of dive into it a little bit. 7.2 trillion, the world's biggest couch potato, I guess we can call it. I don't know. Imagine 7.2 trillion just lounging around I mean, you can see it right here, right? Actually, did I screw this up again? Oh, no, I didn't. Wow, that's awesome. Anyways, imagine, 7.2 trillion just lounging around, earning interest like it's a beat, like it's like, on vacation, like a beach vacation. To give you some context, it took 2 decades for money market funds to grow by 2 trillion. But in the last 2 years, boom, bang, there goes dynamite, whatever. Another 2 trillion has been added. That's like going from a slow jog to a rocket launch, I guess you could say. I don't know. You tell me. But I mean, every time, I mean, like it's like deja vu, right? I mean, history's not so kind when it comes to these type of things. Every time investors have parked this much cash before, in the late 90s, just before 2008, and right before the 2019 crash, the COVID crash, whatever you want to call it, it was like a bad sequel, dot-com bust, housing crisis, and then COVID, chaos, So is the economy about to throw another tantrum? I don't know. We're going to have to find out. And I guess you got to ask yourself the question, why is everyone hoarding cash like it's toilet paper in 2020? You might think people are freaking out about a crash. Well, nope. It's actually because cash is paying better than it really has been in ages. When banks offer like, juicy interest rates, investors say, why bother with stocks or hiring more people when I can just chill and get paid? It's like choosing to binge watch Netflix instead of going to the gym. Pretty easy, comfy, but not great for your health. I don't know how better to say it, but this is kind of what happens. So as money markets rise, typically spending is less, money's just chilling, the economy does go down. Hence, well, for multiple reasons, but hence the Moody's downgrade like a week or so ago or whatever that was. I mean, it's like the economy is like subtle sneeze or something. Like, I don't know, man. Like, this is just basically showing you like an investor, like banks, where they're putting their money: banks, houses, cars, businesses, or just doing cash, right? So, I mean, look, this shit all makes sense. Federal Reserve decides the interest rate. That there gives you your economic growth or down growth, whatever you want to call it. Because as interest rates go up, so does the percent of cash. Okay, that hopefully that makes sense here to you. I mean, it's not too hard to understand, but that's why I'm doing this. Consumer goods order, manufacturing order, building permits, average working hours in a week in manufacturing sector. Everything's like gone down. I mean, the index, this is the leading economic indicators in the S&P 500 on the same chart. You have the leading economic indicators in red, and you have the S&P 500 in black. I mean, basically the index of leading economic indicators has been dropping since 2021, I believe. Yes, which is a fancy way of saying the economy's got a cold or COVID or the flu, whatever. New orders, manufacturing, building permits, they're all sneezing and coughing. And that 0% to 5% interest rate hike, right? That's like turning up the thermostat in a sauna. Things are heating up, baby, but not in a good way. This is what I was talking about right there. And on that note, I mean, and here's a little bit of like the divergence here as the leading economic indicator has been dropping. The S&P 500 has been rising. It's like, I don't know, equities, stocks, whatever, are like, partying, but small businesses are taking a nap. It's basically the easiest way to put this is Main Street, red, and this is Wall Street. Main Street, Wall Street, Main Street, Wall Street. The S&P 500 is throwing a wild party, but small cap stocks, our economy's hard-working little engines, are down like 13%. Small businesses are like neighborhood baristas of the economy, I guess. I don't know. They keep things running and serve half the jobs. If they're struggling, it's a big red flag, especially when the market is continuing to go up, right? Just think about that just logically for a second. So this is a snapshot of the S&P 500 and the IWM or Russell 2000 small caps. What I was saying was when interest rates begin rising here, when I was saying earlier, the small cap stocks are still down 13% from when this started, as the S&P 500 is obviously, at one point, up 30. It's basically almost back where it was. Yeah. So that just goes to show you like again, it's Main Street versus Wall Street. It's Main Street versus Wall Street. That's all it is. I mean, small businesses, GDP, 43%, jobs in the economy, 50%. Unemployment is inching up, but we're not in like full recession mode yet. I mean, I think we kind of already are in one, but I mean, the secret sauce keeps things afloat. Oil prices, I mean, I'll keep going, but as the economy goes down, unemployment rates go, or the unemployment rate goes up. I mean, very simple, very easy to explain. Another example is, here you go. You have so that the unemployment rate, as it rises, we're in a recession. Now, right now, we're kind of, we're slowly rising. I don't know what's gonna happen. I mean, who does know, right? But unemployment is inching up. But like I said, we're not in the full recession. I mean, but when oil spikes, the economy usually sneezes. And then when it sneezes hard. I mean, we had a big oil scare in 2022 with the whole Russia-Ukraine thing and inflation, but prices have cooled off since, giving the economy a breather. I mean, I can show you right here. You have the unemployment rate in blue, and then you have U.S. oil, right? So oil is kind of like the wild card in a sense. If oil prices start climbing again, buckle up. It could be like, the straw that breaks the camel's back, I guess, as you could say, or sends the economy tumbling. And this chart kind of shows you a little bit of that. So remember, this is the unemployment rate, right? Unemployment rate. And then you have your oil spike, right? And unemployment comes down, it kind of flattens out, and then boom, oil's up, unemployment goes up, and then comes down, and then oil comes down, right? And then boom, oil spikes, unemployment spike, or oil spikes, unemployment spikes, whatever. you get the picture, right? I mean, it's very clearly visible here. I mean, what do you do about this, right? And what should you do? I mean, I would just keep your eyes glued to interest rates, cash flows, and oil prices. I mean, these are your and bonds, obviously, but these are your economic like weather signals. If you want to stay ahead of the game without losing sleep, go ahead and hit that subscribe button. Smash the like button, ring the bell so you don't miss out on any of these updates, okay? Yeah, I mean, look, if you have any thoughts, drop a comment. You know, are we heading for another economic roller coaster, or is this like a calm before the storm? I think the storm's already here. It hadn't started raining yet. I think it started sprinkling, but yeah, that's part one of this fantastic little video we're doing here this evening. Or I'm sorry, this morning. I don't even know what time it is anymore. Okay, so what you're looking at right now. I want to go over something because this is something that I discussed the other day on Twitter. I discussed it on YouTube. I discussed it today. Let's put it this way. Right now, this is a 4-hour chart of Nvidia. Okay, I'll get into that. But like yesterday was so wild. Okay, the way things kind of played out, because I mean, you got to remember what happened here. I mean, I called it out. I'm sorry, I'm not the one to say. I'm usually not the one to say that, but I did. And there's two scenarios that happened on Wednesday after the closing bell, when Nvidia's earnings report. That was one of the things that happened. But at the same time, there was news right after the market closed, about 30 minutes after or so. I guess the court said that Trump wasn't like legally allowed to put these tariffs in place at all, period. Like, you know what I mean? And I'm sitting there like, you gotta be kidding me, right? This guy's I mean, how many court cases is this guy beaten? I mean, this guy, you think he's gonna like let that like get in the way? And I was making comments about this like on Twitter and like all sorts of stuff, YouTube, and even in the Discord server. And some people like just didn't want to believe me or whatever. But I mean, I can just show you proof. I mean, this is our YouTube page right here. Like I said, if you want to join, all of the links and stuff, even for the podcast, they're all right there. But even on Twitter, man, like I was like legitimately like trying to like make a point here. And I don't mind all this, but I gotta start from somewhere because there was so much going on. Okay, I think I started with this post right here. Okay. And I said Nvidia earnings results basically in line. I mean, they were good earnings, I'm not gonna lie. Not a blowout. Prices right back at previous highs, the chop zone, right? And I marked all this out, for the Twitter. This is where sellers, stepped in before red flags. The MACD is showing a bearish crossover. This is on the daily. You have, you're basically approaching overbought right there. And remember, this was a few days ago. I mean, anyone who didn't take profits, here and missed it, they're most likely going to be taking profits here. And just go back and look at any of the Mag 7 stocks, man, that that reported this quarter or whatever. I mean, they all, even if they had inline earnings, like good earnings, whatever, like they didn't really they didn't really do much. I mean, they moved, but like it wasn't anything like significant, and it didn't last for sure, even if they did go up. And I was saying that, and I was making a point of that, and then I mean, the only exception is Tesla, who reported absolutely horrible earnings, but for some reason they just went crazy. But that's a whole nother story. Elon's on another planet with all this stuff he's got going on. But anyway, so basically what I was saying was, this is the chop zone. I mean, anyone who has profits here, blah, 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 blah. So again, after that, I'm going to get to it. Don't worry. Oh, shit. Excuse my language. After that, the next day, I said, Nvidia to the moon, question mark, question mark. Yeah, sure, whatever. Try to tell them, but they wouldn't listen. And this is, okay, so here was Nvidia's earnings. Nvidia to the moon, they said, my ass. I tried to tell them, because exactly what I thought. Okay, this was a combination of Nvidia's earnings being in line or doing well, and the news that tariffs were like not going to be able to happen. And I made plenty of comments saying, first of all, I'll go back in history and show you what happens when Nvidia does good on earnings, except for a few instances. But at the same time, like, I was also like trying to tell people, like, y'all really think that Trump's gonna just like, like let his tariff plan like just go to shit? No, I'm sorry, it just wasn't. And so of course it did exactly what I thought. Okay, it sold, Nvidia sold off in pre-market just to sell even more into when the market opened, and closed basically almost right back where it opened up at, or where it closed at the day prior. It was very easy for me to spot that. I didn't even really need to think twice about it. It's true. I mean, I called it. So, and I today, Friday, the 30th, I alerted in the Discord community, Nvidia puts, and I'll show you. I'll make a point of that, but it's like it called the dump before it even happened. So if you missed it, congrats on being blissfully unaware. Ignorance is bliss, I guess, and so it's not checking your portfolio. Market dropped, didn't bounce back, but don't get comfy. Don't get comfy. The drop might not be over. Keep your parachutes handy, baby, and your therapist on speed dial. So with Nvidia, the king of doing the opposite, right? Nvidia earnings are like that friend who says they're coming but always cancels last minute. I'll be there. Stocks tank. Never mind, I'm out. Stock store. Classic. Every time Nvidia reports earnings, it does one thing, then the exact opposite the next day. Up, down, sideways. This stock's got more mood swings than a caffeinated squirrel on a freaking roller coaster, man. So let me go back to the chart real quick then while I'm at it. So on a 4-hour, we can kind of get a little granular here. So here's their, well, let me actually just double check this. So here's their earning day right here. Yeah. So if you look right here, this is the earnings report, okay, and after hours, right? Because this is trading hours. This is 4-hour chart. And then this is also, you got to remember, this is also combined with that Trump stuff, like, where he's not allowed to, do his tariffs or whatever. But as you can see in pre-market trading, it started to level off, and I mean, basically, it wicked to this high right here. It tried to do it again at market open, and then it just sold off. But if you scroll back just a little bit, and I can actually show you more on a daily, but what's going on here, right? So, and I'm gonna go to the daily now because I have to show you something. First of all, the key level to watch on Nvidia anyway is going to be about 136. Should be somewhere in this level right here. I mean, obviously you can just see 136 has just been this like level of like, it's had, besides this earnings or whatever, it's had trouble, getting above it. And you can see these trend lines that I drew. If it stays below 136, if it's, we're heading to the low 130s or even 117. Now that's a little drastic. I say 117 because, well, first of all, let me show you something. This is the previous earnings, right? On the 28th, right? 28th. Well, that was the day after, but you can't see after hours in here. Anyways, but what happens? It comes down, right? Okay. Previous earnings was on. Stop doing that. On February 26th. So 26. Okay. So this is the 26th, right? This is they reported after the bell. Here's what happened the next day. Boom. And it continued to drop, right? So let's look even further back. I'm just giving you guys an example. On November 20th of 2024, this is the 21st. Okay, here's the 20th. Here's the 20th. That's when they reported after the bell. They obviously kind of opened up high, came back down, and then kind of, ended somewhere in the middle. But look, they dropped. Let's do one or two more examples of this. August 28th, 2024. Right here. Okay. Next day, down. One more example. This might not be a good one. I don't know. This is going to be May 22nd, 2024. So they reported in. Okay. So this is like that one instance, right? What did they do before that, though? Okay. Well, so it's been the past year or so that no matter what, their earnings, they might go up and they might go up, but then they sell off every single time. Just something to be aware of. And as a matter of fact, while we're at it, I'll show you, and then I'll get to whatever they want to talk about. Then we can get on with it. But so on a 15-minute chart today, I will. I'll hide these drawings for a second because they're not applicable at the moment, I guess. So here's what happened. So, okay, like here's their earnings. Here's the drop off. This is Thursday. Okay, today. Boom, right? Where did it open up? 138.72. And it went all the way down to 132.92. Okay, so I was looking at this chart. I watched it do this in the morning. It went up, but came right down, and I just saw the momentum. By the way, these are pivot point levels, point of control, resistance 1, support 1, support 2, and then there's going to be a support 3 down there. You just can't see it, and there's a gap. But what I'm trying to say is, I saw this. I saw the momentum. I decided, and I don't really typically trade like 0 DTs. Okay, like it's not my thing. Ugh, crap. But on a Friday, if I can get some cheap Nvidia premiums or Tesla or something, I'm gonna look at it, right? No doubt. And so under trade alerts here, so right here, I alerted that I entered the Nvidia 133 put 0DTE at 14 cents, and I got 10 of them. Okay, I got 10 of them. It cost me $140. So why did I choose that? Why did I choose that strike? It rejected here. Now I could have chose the 135, 136, but I just had a feeling. I was here. This is the VWAP, right? It could not get above VWAP, man. It just like couldn't do it. And the 9 EMA. Every time it would try, it would fail. And so I was like, okay, if it breaks this level right here, which is like 135.78, well, next stop is going to be 133-ish or whatever. That's how I chose that strike price. And it was 14 cents or $14 and about 10 of them, right? So if I go back, I always create a thread for when I do my plays. See, I even look trim Nvidia at 7 runners left. Trim Nvidia 35, 5 runners left. And then if I open the thread, well, I can just open it, right? Well, when I like be in it. Anyway, so I was just like, okay. Remember, I got him at 14 cents, right? Or, yeah, right? Okay, so I was already up there. I was just showing the gang, you know. Then I'm up 75% when it was trading at about 25 cents a contract. And then I was kind of just showing everybody like, hey, like watch these levels. This is the hourly. If you noticed, it did bounce here for a second, which kind of freaked me out, or it didn't freak me out, but like it definitely like concerned me because we were up. I was like, oh, should I? So that's when I started scaling out just a little bit, but I made my plays free. Then we had the alerts, like our algo alerts, like basically saying go short on all time frames. It was saying on the 15 minute, 5 minute, and a 3 minute. I mean, it was just confirmation for me. So I also have a small account builder that I do, like for some of the, like, to show people that you can start with like $50 and turn it into $3,000 or whatever. So I just bought one contract. I think I got it at 16, but like I was already up 100%, like $16. I get it. It's not a lot. Remember, it's a small account builder. But look, it broke through that level that I was afraid of, and then it was heading right down to where I, getting close to being in the money. So these contracts, like I was just giving people like an example. Remember, I got this one at 16, this thing's at 42. That's 200% right there. Okay. 58, 314%, 70, 400%, man. I was up 50 for one contract. So I got rid of that thing. Actually, I think I sold it for around 80 something. I can't remember. I got to look. And then basically we went in the money for a little bit for like, I don't know, maybe a minute or whatever. But all I'm saying is called it, and whoever followed it was a banger. Banger, banger, banger. For 14 cents, I mean, if you sold it at the bottom, you could have potentially, I think I sold like for 80 or something. I don't know. Either way, like, and that was my small account. Like my big account, I mean, dude, I had 10 at 14. I sold 5 of them at, well over, made my money back and was playing with house money at that point. So and at the end of the day, Nvidia did go back up. All right. So like this is basically where I kind of started selling my small account thing. And then I started to see the momentum shift. Okay, so this is the TSI, the true strength indicator. Typically when you see the gold cross above the purple, you're gonna see that's technically a buy signal, and it matches pretty much up with the super chin buy signal. Same with the downside, right? Gold crosses underneath the purple. What do you see? Sell signal. Gold crosses above, barely, right here, right? But even here, so it's these are the pivot point indicators. This is VWAP. This is the 9 EMA. This is the TTM squeeze momentum indicator and the true strength index. I use these on shorter time frames than longer. But anyways, so just wanted to make sure everybody was aware of that. You want to become part of the Discord community? Come on, bring it. But let's talk about SPY real quick. So let me go to a further out time frame. Okay. Now I'm gonna bring these drawings back. Don't get all crazy on me. It's gonna look a little spaghetti-ish. Okay, so you have your moving averages, your major moving averages. I can actually hide those for a moment because there's no reason to have those on. And I can turn the super trend off because it doesn't matter. Okay, so what we're looking at here is SPY on a daily. So SPY is below key levels, 590, 592. Okay, that's, yeah, it's below those key levels. Okay, like you can see the trend line, it's below them. I mean, yeah, it's, or whatever. You can call it 590, call it 592. I don't care what you call it, either way. Bulls are defending like the 585 area like you wouldn't believe. I mean, look at this wick. Like literally like 585 here. I mean, it broke it, but came back up. This is the fib retrace. That's 78.6 fib retrace. Yeah, I mean, they're defending the 585 level almost like a slice of a pizza at a party or something. You know, back off. I licked it first. Suck it. There's an inverse head and shoulders pattern kind of forming. I might have to kind of do this on a 4-hour, I guess, to show you a little bit more, but you see it? Inverse head and shoulders. So we'll see what happens with that. I don't know. But it's broke the neckline. That was the point I was trying to get at. Like, you know, your neckline is right here. Okay, this is the neckline. This yellow line right here. It is broken the neckline. So, you know, it might not be that might not be in play anymore. So now it's just a weird Picasso painting or whatever. Maybe it's art. Maybe it's just a mess. I don't know. It looks like spaghetti to me. Sheesh. Bottom line, don't trust the pattern until it proves itself. You know, like that guy who says he's really good at trading, but can't even pick a good avocado or an apple or an orange. I don't know. So on a daily, I'm just gonna do this real quick and I'll be wrapping up here. On the daily, I mean, look, here's a trend line from the bottom of basically like Liberation Day and all that, right? And then I drew a little tiny trend line like right here. So it's completely, you know, it's broken. It broke below this trend line. It popped out here. So it's in this really, really weird area. But the funny thing is, look, I mean, this is, you got bearish divergence on the MACD. You're still sitting very high on the RSI, okay, and almost overbought. And now I will flip it to a weekly, and it does kind of paint somewhat of a different picture. This is more of a bullish crossover on the weekly. And you're kind of just sitting right in the middle on the RSI, right? Okay, but let's look at a monthly. Well, that doesn't look too good, does it? That's a bearish crossover on the MACD and the monthly. And you're riding very high in the RSI. So if I go to QQQ and go back to the daily, the only difference really is the SPY is making lower highs, sort of, while the Qs are making higher highs. I'm sorry, lower highs and higher lows, I guess, is what the word is for it, I guess. I don't know. Like for instance, if I go back to SPY, you are making like lower highs, while the Qs have made higher highs, if that makes any sense. Okay, there you go. If you're not, I'll leave it at that. I mean, I could get into a lot of stuff. I mean, honestly, what you really need to be paying attention to are the bonds. This is TLT, very important. This is on a daily. TLT basically, TLT. If you don't know what TLT is, it's the why does it do that? It's the ETF that represents the 20+ year bonds, right? So basically, if TLT is down, the 10-year yield is up. Okay, so it peaked at COVID, right? And basically, ever since then, it kind of hovered. And then guess what? Going into, it started to drop, but this drastic drop you see here, this is when the Fed started raising interest rates. And it caught itself here at about this like 80, or sorry, the 90, the 23.6 fib, like 95 and then 95.50. It tried to once, and then came back up and got rejected here, and then it came back and it went right through it, right? So it dropped all the way down to, and this is October of 2022, to 70. Oh, no. I'm sorry. 83, 84. And then it bounced from there because that was the lows. Like if I go to SPY, you'll notice that you'll see it. You'll see it. This is a 2022 bear market. And this was the low. Right here, October 13th. So as that was at the low, TLT was also at the low. Okay. Why does that matter? I mean, why does that matter? I'm telling you right now. Right, the Fed, Trump, whatever. They don't care about Tesla or Nvidia or SPY for even. I mean, I swear, I've said this before. They will crash the stock market to save the bond market if they have to. So basically, what happened here is we were approaching about 5% on the 10-year yield. We didn't get all the way there. So it rallied, came back up, and it kind of did this little whatever maneuver. But then in October of 2023, we got down to 77-ish, 78 on TLT, which is the lowest I think it's ever been. And that put us at 5% on the 10-year yield, which is a critical level for yield. So it rocketed back up. But guess what? Just to get kind of stopped right back at the 23.6 fib, and it just hovered, and then this 84 level became very, important. Like it bounced here, it bounced here, it came back up, and then it came back down and bounced here, and then it came back up, and then it bounced here again. So it's really trying to hold that 84, because if it goes back down to 78, we're gonna see 5% on the 10-year yield. And honestly, I think that's gonna happen eventually here. It just all depends on what Powell and Trump and all this tariff crap and inflation and all this stuff what happens with it. So anyways, you should be watching bonds. You should be watching bonds. You should be watching the dollar. The dollar has taken a giant dip from about 110 in January to its lowest at about 97 in early May. I mean, that's crazy to go from 110 to 97. That's like a $13 drop. I mean, if I go to a weekly, I mean, when's the last time we saw some kind of crazy drastic move like that? Basically, right when it was right in the middle of 2022. So it's finally broken its level of, I guess, support. Okay, like if you want to call this resistance, that's fine, but this level of support was broken and it's still below it. So you need to be watching the dollar. The yen is something I also watch very closely. Typically they move in different directions. So on a daily, so as the yen drops, as the dollar drops, the yen typically will go up. Typically. You also need to be watching gold. Gold's been on an absolute tear, right? It just came off of its all-time high at this is GLD, the ETF, 317.63. It's trading currently at 303. It's still extremely elevated. Look at this on a daily. So on the daily, this is a really wild looking MACD right here. It doesn't know what it wants to do, and the RSI is right in the middle. On a weekly, you're overbought. On a weekly, you are super getting ready to do a bearish crossover. I don't even want to know what the month looks like. The month, this thing has gone parabolically vertical, so I wouldn't be a buyer of gold right now. I just wouldn't. I would wait and see what the Fed and stuff has to do. As far as other things that, you should be paying attention to, I think, watching Bitcoin is obviously something that, as an indicator, I'm not a big crypto guy, right? So as an indicator, I would be watching crypto. Here's the fib level. It is sitting right. It has come right down to this 78.6. So I'm just saying these are all just things you need to watch. At least that's what I watch to help me kind of gauge the markets. Futures, obviously, too. And this is just like a little watch list and stuff. But I'll go back to SPY real quick just to show one last thing. I'm going to turn the moving averages on. So these are the daily moving averages. Okay, so and I can actually clear out these drawings at this point. Well, yeah, I don't need that. I don't need this. I don't need this. I don't need this. Get out of here. Get out of here. Get out of here. Okay, so what you seeing here on SPY? Let me zoom out. Okay, peak of the market to trough. This is April 8th, April 7th, whatever. This is the day that Trump said, today's a good day to buy, and then he did the 90-day pause thing, right? Yeah, we've come up and down from here, but basically we were under every single major moving average, and then now we are above every single major moving average. Now, we almost, the other day, on the 23rd, I think it was a week ago, right before the weekend, Memorial Day weekend, we came down, but guess where we stopped? And look how coiled up all the major moving averages are. You got the 100 in purple, the 200 in orange, that's the 20, that's the 50. So you had the 20, the 100, and the 200 coiled up. And of course, that's a perfect level for it to catch itself at. So it came back up, but we're sitting in a really weird spot right now. We're still off the highs by, I don't know, we can find out real quick if we want to. Why not? Shit. Okay, well, let's just put it this way. In about a month and a half period from, what was that, February? February 19th was the top to the bottom on April 7th. That was a 21% decline in this SPY. About a month and a half to do that. Okay, now let's just move this over here real quick, or I can just do it like this. The recovery to its peak, which I believe is about right here, was another about month and a half, 6 weeks, and we recovered about 19%. So we went down 21.5 or so overnight. So we're literally sitting like 2 to 3% off all-time highs. I think we're going to go to all-time highs again. It is 100% possible. It is. Do I think we'll blow through it? I don't know, and I don't believe so. There's too much crazy news. All it takes is a tweet from Trump, So look, first of all, if you're not in the Discord, you're missing out. Okay, memes, profits, the occasional like emergency pep talk. I'm just kidding. I mean, it's just a good community. I mean, let's be honest, mostly memes, right? Anyways, losses do happen, by the way. Like, the Bag Brigade is not an alert service. Yes, we do provide alerts, but that's just for transparency purposes only. If you're going to follow a trade of any of mine or any of the analysts, you better do your own homework. Okay? Like, I give my reasonings behind why I get in a trade, but that doesn't mean I'm always right. So losses happen. But we tend to make them back tenfold, okay? Or at least I do. I mean, math may vary. Consult your calculator or just ask ChatGPT. We love imaginary numbers. Blah 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 blah. Look, just final words. Manage your risk. Trust history. Don't be a goddamn hero, okay? Like, don't be a hero. All right, back to the Discord real quick, just since we were talking about it, and I'll be done with this video. Just manage your risk, trust history, don't be a hero. Okay, that means don't YOLO your life savings on speculative stocks, unless you like living dangerously and explaining things to your mama. I don't know. Always have a plan and a backup plan. And maybe a backup plan for your backup plan. Which is, I think, what they call a contingency plan. Have a contingency plan? Or just get a blanket and cry into it or something. Remember, the market doesn't care about your feelings. The market don't give two shits about you losing money. That's for sure. But the Bag Brigade Discord community might. Or at least, we'll send you a meme about it. Other than that, other suggestions or anything. So, like, if you want to survive this market roller coaster, keep your eyes on those key levels. Don't just trust Nvidia's mood swings or, I don't know. Maybe join the Discord before the next emergency hit. Like, subscribe. And let's all try to lose our shirts this week. Or, not lose our shirts this week. Whatever you want to do. Take your shirt off. I don't care. And if you do lose your shirt, at least you'll have a great story for the next Discord meme contest. Blah, 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 blah. Other than that, man, I really just wanted to get this video out. It's just funny what's going on. We're living through historical times straight up. And at the end of the day, guys, or folks, gang, all we're here to do is honestly, all we're here to do, at least with the Bag Brigade, is educate. Okay, it's education. I have an education. Again, right now it's free. It's not going to last too much longer. And I'll get into more details about it, but got a lot of good analysts. And obviously this slate, no one's really on right now. These are just some of the members. I'm on, but I'm not on, right? But anyways, I'll leave it at that. Thanks for tuning in. Don't forget it would mean a lot, like, subscribe, turn on notifications, tell your friends about us. Same with Twitter, all that stuff. We're trying to do big things in a different way. I really am not for this whole, people buying into Discord servers for just trade alerts and following blindly like sheep. I don't know. That's not what we're about. It is about education, and how to do this eventually on your own for financial freedom. Hopefully that makes sense. That's basically the mission. So With that being said, I'll leave you with my parting words. Chuck Bloomberg, he don't ask why. He asks why not. I mean, because why not, right? What else? Why not? Also, keep your head on a swivel, I guess. Other than that, though, do yourself a favor. I can educate you, but I can't save you. Hopefully, you got something from that. Either way, thanks for tuning in. Please share the video, like it, subscribe it, do whatever if you got anything from this. Really appreciate it. Catch you on the next one.